1.4 million Australians in mortgage stress. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my morning stein of coffee, and I thought we'd start the weekend by having a look at this article from the ABC, discussing, well, the 1.4 million Australians that are in mortgage stress, and the 100,000 that could default once JobKeeper disappears. And in it they'll discuss a lot of Martin North's fantastic research into mortgage stress. And we've been, all of us who've been following the news and listening to what he's been talking about over the last couple of years, Martin and John Adams, particularly with regards to housing and stress. The question I am asking, would anyone have predicted the combination JobKeeper and bank mortgage holidays? Did anyone predict those? Did anyone anticipate that banks would be, that protective of, that nice and friendly to their clients, or that protective of their assets? Because I don't recall anyone predicting that. Even the people who said property will be fine, it'll shoot to the moon, it'll never go down. They didn't predict that. So the question is, and we'll go through this article in a minute, the 100,000 here that could be at risk of default, and we saw even arrears rates were climbing. The data published by the RBA, particularly Western Australia and Northern Territory, going quite high. Queensland isn't doing much better. Could this 6-month window that people have been given, this grace period for them to hold off on their mortgage, and sure, it'll come back, could it have been enough time for them to readjust their lifestyles, readjust their personal budget, get everything under control, so that it may not be as dire a situation as we think it could be when JobKeeper, if it just gets turned off? I'm more and more, I think more and more it'll be political suicide. But then again, this is what our politicians are like. Would it be enough time that they can, get rid of the subscriptions, cut the budget, really to the bone, sell all the rubbish that they don't need, realize, okay, we were losing money here, we'll never be in this situation again, we'll do everything I can, we'll take little Timmy out of that expensive private school, he's going to be homeschooled now because we're used to it, which actually, there is going to be an increase of people homeschooling now because more people have experienced it, but will that happen? Will that happen? That's the question I put to you. Or am I just being naive because I've got my first coffee and I'm getting that caffeine buzz this morning, where I think people will actually change? So let's have a look at this article. Mortgage stress levels among Australians have continued to soar amid the global pandemic, with data showing more than 1.4 million Australian households are now in mortgage stress, and almost 100,000 could soon default on their loans. Now, let me know, have you been in mortgage stress? Has there been a period in your life when your income just hasn't been enough? Where, maybe you lost your job, maybe you got a small business, a big client pulled the pin on a big project, and you were left holding the bag. Did a situation like that happen? How did you fight out of it? Because, it sounds all dire. But sometimes humbling and going through a situation like that can be the best thing that happens to a person. Maybe share your experiences in the comments below. Someone might take something from it. As Australia enters its first recession in 29 years, we couldn't make the 30 mark, damn it. Market analysts and economists predict that once the JobKeeper payment ends in September and mortgage repayment holidays are over, the levels of cash flow stressed households could quickly translate into mortgage defaults. And that's a legitimate concern. That's something I've been talking about too, where people are saying, "Go rush, get into property now." All the FOMO pieces we hear every day. Wait until September. Wait. The latest data from Digital Finance Analytics, based on its rolling household surveys, revealed that to the end of May, the percentage of households in mortgage stress reached 37.5%, which equates to 1.42 million households. DFA principal Martin North said the study defines mortgage stress in terms of a household's actual cash flow, incomings and outgoings. The mix of households in stress are changing as a larger number of affluent households are finding their finances are under pressure. Indeed, whilst many battlers are under pressure, they are used to it. But more affluent households are experiencing financial pressure as income incomes have dropped. And that's a good point, to be honest. That's a very good point, where the battlers are probably used to doing it tough. They're used to doing it hard. So hopefully they've adapted to it and can find ways to push through. We'll have to see. Because, I mean, just think about it. If you're used to living the caviar lifestyle and all of a sudden you've got to pull back, that's going to be a bit hard. And that's going to have some strain on some marriages. He said JobKeeper had not been a full replacement of their usual income. They're also exposed to property investments which are not performing, higher vacancy rates and the like, and in some cases reduced hours too, he said. He's right there. We all saw that article a few days ago, or probably a week or two ago now, of the teacher that had invested in one investment property, and then another, then another, then another. He had 6 of them, where he was just paying interest only and using it to reduce his tax. He was negative gearing them. And now he's not making any. I'm laughing. I really shouldn't, because it's in some ways it's tragic. It's really sad that people, educated, smart people, have gotten themselves into this much of a mess. Where, the younger guy who's got the 200 properties, he's targeting the working class suburbs. He's targeting the properties where a good portion of his rent would be paid in rent assistance. Typically, it can take 2 to 3 years for stressed households to either sell up on their own volition or get foreclosed. So we expect higher defaults ahead, given unemployment will be under 7% by the end of next year. So this is the thing. This is the time frame. 2 to 3 years. That's what we have to keep in mind, particularly with all of these predictions, all of these concerns. We're talking about a dragged out process. It's going to be 21, 22 when we start seeing the outcomes of this. We're heading into recession, guys. This is going to be a few years of just tough times. I'll bring up a good example is the property data room. I'll bring that up. I haven't got this programmed in yet from all these other places, from the Property Council of Australia. And one example that I think is quite good, that I like seeing, I shouldn't say like seeing, but nevertheless, office vacancies, commercial sector. Look here. After Australia had the recession that we had to have, look how many years vacancy rates were still high in Australia. Look at Sydney. Look at Melbourne, everyone. Look at Canberra. Pays to be a civil servant, perhaps. But that's just showing you that there's going to be a lag to the impact of this recession. It's going to be tough times ahead. And I just read a comment where a viewer had said, my wife and I, we've cut back on our spending even though our income hasn't changed. So they're still in a good position. He's cut back on his spending with his missus and he's enjoying it. Sometimes it's good realizing, I don't need all that crap. Because you get stuck in this rat race. You get stuck in this, I need this, until sometimes you need to get forced and slapped around a bit. And that wakes you up. Rental stress is also rising, putting more pressure on investment properties. Around 12% of investors are indicating they may consider selling in the next year, and around half have been using Airbnb to let their places, which is now not possible, Dr. North said. He's right there. We've seen all the number of Airbnbs which are just flooding the market. I know I had one friend, he was loving Airbnb. I think he ended up kiboshing it because it was more of a hassle. Or I honestly suspect his wife was annoyed that their holiday apartment on the Gold Coast was being used for Airbnb more than their holidays. So stress is not limited to the metropolitan capitals. The highest proportion are in Tasmania, households with low incomes and strong rises in prices, he said. Tasmanian property has just gone insane. Just insane. I'll bring up my chart here to have a look at property prices. And we can see Hobart is that, light green there? You can have a look at the growth there in Hobart. Guys, I remember, because I worked for a Tasmanian architectural firm when I was a student. I was always quite frustrated how cheap the houses were for all the people working in Lonnie compared to Queensland. And they were getting paid the same. But it's beautiful down there, don't get me wrong. Maybe I need to retire down in Tasmania. Only problem is it's so cold. It's freezing. So, and young growing families, including first-time buyers, are the most exposed. Calls to slow or taper off JobKeeper. Dr. North said he was worried about what would happen after September when the JobKeeper wage subsidy and mortgage repayment holidays are removed. He said the withdrawal of payments needed to be tapered and warned that as the banks start requiring repayments again, some people may switch to interest-only loans. He's right there. The banks will do everything they can to keep people out of default. You don't want property flooding the market. Well, it depends. People buying want property flooding the market. They want prices to come tumbling down. The banks don't because it's their assets. I'm not sure switching to an interest-only loan is a smart move, as capital still has to be repaid at some point, he said. I mean, the thing is, there's a lot of people that are already on interest-only loans and are using that to negate their taxes. It's crazy. I mean, are people doing interest-only for your own occupier, where you're living in? Is that happening, guys? Because that seems like a very foreign concept to me. Alison Pennington, senior economist at the Australia Institute's Centre for Future Work, said the situation post-September was fragile, given Australian private household debt is among the highest in the OECD and is comprised mostly of mortgage liabilities. The shutdowns have made many households with higher financial obligations, including mortgages and high private rents, dependent on the JobKeeper and JobSeeker payments, she said. Cutting the income of millions of households will undermine payments underpinning the entire housing finance system. Well, also, the JobSeeker bonus, that's going to disappear too. And I'm hoping people have stashed something aside when they've hit in this situation. She said housing price inflation had allowed Australian households to consume like they're rich. This hollow asset-led growth model was steering us into dangerous, unstable territory pre-pandemic, she said. She's right. The political drama for the Morrison government is clear. The longer people understand government is capable of delivering livable incomes outside the market, the greater risk to the Morrison government's business-led rebuild agenda. She said if the federal government did not support people in being able to continue to pay mortgages and rents, they risked undermining their core political base in the private housing and investment system. The Morrison government is preparing a revamp to its $70 billion JobKeeper program, despite Treasurer Josh Frydenberg conceding the nation is in its first recession in 3 decades. The March quarter national accounts showed the economy shrank by 0.3%, bruised by the summer bushfires and the pandemic. Mr. Frydenberg said the government would reassess the flat $1,500 a fortnight payment and has supported the employment of around 3.5 million workers. We want to understand whether the quantum, the $1,500 payment, continues to be the right amount, he said on Wednesday. Well, here's the thing. There are some industries where they will continue it. They will have to. That the damage will be too great. I mean, I know it's called a JobKeeper, but it's going to ensure a lot of businesses are mothballed or put in a holding pattern. The tourism industry is one. It's going to be one. I think a lot of other industries don't need it, honestly. I think healthcare, they're businesses that are doing fine, that are getting it. And you can't blame businesses for taking advantage for this, because if they don't, they'll be at a competitive disadvantage to their neighbors. So, they'll refine it. You'd hope. Or they'll just remove it like that. And then you'll get a big shock, and then the market will correct. But it doesn't... I don't think that we have the political will here in Australia for the market to be left to its own devices on either spectrum. On deep left or left light. I mean, there's your pick, what we have right here now, guys. Let's not kid ourselves. The federal government has also announced it will give eligible Australians $25,000 to build or substantially renovate their homes in an effort to boost demand in the construction sector. Shadow Treasurer Jim Chalmers said the government failed to recognise that Australians are headed for another cliff in September when government support in the economy is withdrawn. Well, no, that's why they want this. That's why they're spending the $25,000 to help stimulate the economy during that period. If you get a lot of tradies working, if you get projects pulled forward, that will be more economic activity, and that may offset that cliff. You may get some businesses, some people in the construction sector that won't need the job keeper, that won't need the mortgage holiday. But okay, we've got a new job in, honey, ring up the bank, tell them that we're paying principal and interest. Don't worry about it. We'll get them back onto it straight away. That's the point. It's to keep stimulating. They're gonna encourage, because with the time frames and the requirements of this package, they're going to pull projects forward. It's not going to create anything new. So they're going to try and use that with the hope that the economy will not sputter out and may lift up a little bit. I'm just looking at the US unemployment figures. They're much better than expected. People were predicting worse than Great Depression, and unemployment's gone down. So I have to look at that a bit closer. It seems crazy. Anyway, having introduced the support for the economy too narrowly and too slowly, Australians can't afford the government to withdraw the support too quickly or too bluntly, Mr. Chalmers said. Well, we know what Labor would have done. They would have just thrown money at everyone. And, they understand the benefit of this, don't they? The problem is, I definitely compared... Okay, let's compare the $25,000 building grant to the education revolution. And there was a lot of problems in the education revolution. A lot of big businesses skimming pieces off the top. A lot of big builders getting in and getting all the work, and they're not flowing as widely. This can flow a lot further. This will have private individuals contributing substantially more of their own money to the system, so you'll get a better outcome. It's that simple. I'll have to do a video. There's some reports written on the different outcomes in the BERS project, and it's not... guys, look at our education outcome. Education-wise, it hasn't been worth it. A lot of it is a broken window fallacy, and a lot of it is big builders, big project managers skimming a lot off the top and really overheating the cost of construction. It was crazy. And public schools are just to get, okay, you're getting this. And they go, well, no, we don't want this. And they go, don't care. The department says that's what you get, and boom. So, yeah. This is why I would rather see... Well, personally, I'd rather the market be left to its own devices, but I can't see that happening. I think we need to shift the Overton window, and you need to get more people of an individualistic bent into our political system, at least to have a dialogue going. But until then, I would rather individuals be making... or taking, pushing forward and having control over the spending than departments. So, the pandemic sees mortgage arrears rise in March. Dr. North is not alone in his predictions of more pain for households. A report from S&P Global Ratings predicts rising unemployment, sharp mortgage arrears in the months to come. It found the number of homeowners in arrears on mortgage repayments rose slightly in the first quarter of 2020, but the problem would worsen after September. Nationally, arrears on non-conforming mortgages rose 4.38% in March compared to 3.96% a month earlier, while prime mortgages remained unchanged at 1.41%. We do not expect to see the pain of the pandemic reflect in mortgage arrears reporting until quarter 4. Yep. She said lenders are not required to include loans under pandemic arrangements in traditional arrears reporting until the end of the mortgage relief periods. We expect to see a more pronounced uptick in mortgage arrears after these periods end, she said. This may be further exacerbated by the expiration of JobKeeper wage subsidy payments for borrowers whose income or business cash flow are yet to recover from the disruptions to business activity arising from the pandemic. She said mortgage arrears could trend higher in tourism-dependent areas where hospitality, leisure, and recreation services made up a larger share of local employment. And, I think that's definitely going to happen, guys. AMP Chief Economist Shane Oliver said a spike in unemployment could trigger debt servicing problems and forced sales. And that is the thing, guys. Remember, if you have a forced sale, it's the last property in your street, it's the last property in your suburb that affects the prices of everyone else. If people are starting to be forced to sell, property prices are going down. We've got a place across the street that hasn't moved. And I was just talking to the people who sold it to them. They're trying to sell it for what they bought it for. And he reckons they'll be lucky to get land for it. Once the support measures end later this year, measured unemployment will likely rise to around 8% and take a long time to fall back to the pre-pandemic levels of 5.2%, he said. This in turn is likely to lead to some increases in mortgage defaults as bank payment holidays for around 440,000 mortgages end, boosting forced sales and acting as a drag on property demand. While the unemployment rate jumped to 6.2% in April, JobKeeper concealed the true extent of job losses from the official data. Well, that's where you need to look at the combined unemployment and underemployment rate. And using the Roy Morgan methodology, it's sitting around 25% of our workforce. 25% of our workforce. So, I mean, we're entering a recession. I think we're definitely going to have a slow growth, if any. I don't know if we can see this V-shaped recovery. Unless, and here's the thing. We've got all these protests happening around the world right now, don't we? We've got all these large groups of people congregating. And, I mean, that's their right. Sure, some people are taking advantage of the situation to further political aims or to get a new pair of sneakers. But people should protest. Peacefully, you'd hope. But that's what happens when you get more than 20 people together in an area, particularly in certain states, in Victoria and Queensland, and well, New South Wales, it's completely banned. Well, under the pandemic restrictions, you get fined. Let's see what happens, guys. Let's see if the states fine these people. Or, if infections don't spike, and we may, this is a perfect testbed to see if our response has been an overreaction. So, it could be that the economy is switched back on. In a month's time, they apologize. The politicians come out. This is what other commentators are saying. The politicians come and say, sorry, everyone. We're, based on this, we realize now that we overreacted. All restrictions are removed. What do you think would happen then, everyone? What do you think would happen then? Because right now you can't even have all the restaurant numbers restrictions are lifted. People can go to church on the weekend. You can get sporting events happening, more groups going out. The borders are open between the states. Do you think that would be a boost to the economy? So that's another unknown. We'll have to see. We will have to keep an eye on it, everyone. So it has kept millions of workers attached to their employers and therefore counted employment. Yep. If those 490,000 people who dropped out of the labour force last month were still actively looking for work, the numbers of officially unemployed persons will be nearly 500,000 higher at around 1.3. Dr. Oliver said a 20% house price fall was still possible if there was a second wave of the pandemic, but in the absence of that, he expected national average prices to fall by up to 10% next year. So Australians are finding it harder to pay their bills. The pressure is compounded by the fact that people are not just struggling with mortgages, but household bills in general. NAB economist Kanjin Oyong, let me know if I butchered that, apologies, KO, said ABS household survey data showed financial stress remains widespread, with 7% of households receiving some key payment relief. This includes relief related to mortgages, rent, credit cards, utility bills, and other loans, she said. Narrow Roads Capital's John Rochford said data from the Australian Banking Association in early May showed more than 10% of home loan borrowers in financial hardship. Those who have asked for hardship assistance, getting approval from their lender or reduced their repayments or getting a partial reduction in repayments, such as switching from principal and interest to interest-only repayments, typically aren't counted in arrears data. But the fear is that these could translate into defaults if the banks stop being lenient. Given the political pressure on the major banks, if borrowers are able to continue to pay at least the interest on the loans, banks are likely to give them time to find another job or get their business back up and running, he said. However, if borrowers can't meet the interest payments on their loans, it's likely they'll be under pressure to sell the property. Yes, but if you look, interest payments are a joke right now. Our cash rate is so low. If you can't meet that, then I bloody hell, you've got a huge mortgage. You've really stretched yourself too far if you can't just meet your interest at the moment with rates so low. I looked at what the cost was to service a $1 million mortgage. It's what, $1,000 a week, bit over $1,200 a week. It's crazy how cheap they're making this money, and then we might see negative interest rates appear. So he said the federal government stimulus payments were helpful, but nowhere near sufficient to cover an average mortgage repayment and other living costs for a family. Well, that's not what they're intended for. So here we have it, guys. Some interesting insight into the potential September, Black September, and the millions of people, 1.4, that are in mortgage stress, and the significant number that could default. A few unknowns. If we don't get another wave of this pandemic, could that mean the economy is opened up faster? We've got test cases happening right now. If we have opportunities for the banks to continue to be nice and friendly or give people those interest loans, could that stop this potential forced sale or at least contain it? And if the economy slowly trickles back, are people going to learn from this experience? Are they going to cut back their costs? Are they going to tighten their belts? Are they going to fight through? We'll have to see, guys. I think there'll definitely be a whole lot of investment properties flooding the market, particularly those with their 6 properties that can't get any rent. As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and would like to support the channel, there are a few ways you can. You can share the content, get the videos out there, help the channel grow. You can support us via YouTube or Patreon. You can use our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. Buy our merch from HeiseSays. Use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. I'll see you in the next video.